The latest interest rate decision tomorrow comes amid intense competition between lenders for new mortgage customers. And some of that, of course, is going to be seen later this week when the big banks start reporting their half-yearly profits. We're going to be speaking with Shane Elliott, the boss of the ANZ Bank, a little later in the week. Now, technically, all this should play into the hands of those refinancing or indeed taking out new loans. Let's find out a little bit about this with Anja Pannek, who is the Chief Executive of the Mortgage Finance Association, which represents mortgage brokers in this country. Anja, many thanks for your time. Your members right now are writing about 2 in every 3 mortgages in this country. So you're more attuned to that competitive pressure that's out there than anybody. What's the story?
So we are in an environment where there is absolutely all-time record competition, and I think this really plays into the hands of consumers as well. What we do know is that something like 880,000 borrowers are actually coming off their fixed-rate mortgages this year, and that's adding a lot of competition in the market. Banks are obviously fighting to get a chunk of that and to get those customers on board.
OK, so then there's the other aspect of this, and that is the margins being squeezed. Now, quite clearly, there's 2 ways that bankers can go right now. They can either try and compete vigorously for that new business, or they can stay out of the marketplace fearing that there might be bad credit risks coming into it. But of course, that's the job of the mortgage broker, to try and navigate through those lenders to see who has got the credit available at this stage.
Absolutely. And that is what our members, our mortgage broker members, are absolutely busy doing at the moment. The feedback that we're getting from them is it is an extremely busy market. So they've got customers, in particular that, 880,000 customers that are coming to them and asking for guidance in terms of where do I go? What do I do? Like, how do I assess whether or not my revert rate, the rate that I move on to, when my interest rate moves from fixed to variable, what do I do? Is it competitive? And what we find is there are huge benefits of going and seeing a mortgage broker. They'll be able to look at that revert rate for you and give you an indication based on their panel of lenders, like, is that competitive? And if it's not competitive, what your mortgage broker can do for you, and what we know so many of our members are doing right across the country, is actually negotiating on behalf of their clients, on behalf of the borrower, going back to the bank, seeing how much can be discounted off their available rate overall. So there are definitely a lot of offers, both in market in terms of if you're looking to refinance, or alternatively, if you're actually looking just to stay with your current lender and get just a little bit off. And Ross, I just want to put a bit of context around this as well. If a mortgage broker is able to successfully renegotiate, say, 0.1% or 10 basis points off a customer's home loan, that's about $500 a year. But over a 25-year period, that's about $10,000 or $11,000. So it's really worth reaching out and seeing, what position you're in and how a mortgage broker can help you overall.
OK, and then quite clearly the whole issue about the mortgage stress that some families might be under with rising costs, rising energy prices, but 10 consecutive mortgage rate increases from the Reserve Bank. It quite clearly then is beholden on those mortgage brokers to know their clients, to make certain that they're not getting themselves really into too deep water as they're taking out some of these new loans.
Yeah, absolutely. And I think the thing everyone needs to recognise is that mortgage broking is a highly regulated industry. Mortgage brokers are very experienced and they actually operate under what's called a best interest duty. So they will recommend products to you that are in your best interest, and they actually take into account your particular circumstances. So it's very much based on you. You're not just a number. They get to know you. They get to know about your family, what you're looking to achieve through refinancing, or even if it's going into your first home. I think the other thing that's really important, so Ross, you called out here, the broader pressure around household budgets. What we find our members do so much of, and in particular in the current environment, if you want to understand what your options are and you're thinking about refinancing, they'll actually do the work to help you get what we're calling refinance fit. So having a good look at your household budget, having a look at opportunities to, where can you sort of tighten the belt if necessary? How can you look to consolidate debt, if that's credit cards, buy now, pay later, debt that you might have taken on? All those steps that actually make really good sense in the current interest rate environment, in the current economic environment for a household, as well as doing that, heavy lifting in terms of renegotiating your rate, or maybe moving you to another lender if it makes sense.
Yeah, Anja Pannek from the Mortgage Finance Association, Chief Executive there. Many thanks for your time today.
Thanks, Ross.